Hey everybody, this is Jim at SP500chart.com. It's 2 minutes after 4 o'clock on March 27th, 2014. And we're going to take a look at the S&P 500 chart. I've been watching this pretty closely today because we're in that, we're in an area of the chart where a reversal to the upside is needed if you're a bull. Well, it's needed if you're a bull and you're looking at things in fairly short term. I don't know necessarily that it's needed if you're an intermediate term investor or if you're a long-term investor. But if you're a short-term investor, where we are and where we spent much of the day today is important territory. Before we get into why, I need to remind you that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw these lines on charts, but you have to draw your own conclusions from your own research, and please make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, we're looking at a 15-minute chart, and this shows the part of the chart that I've talked about over the past two videos pretty graphically here, that we have been range bound. We have been between 1840 and 1884-ish, 1883-ish, but you can see it between this line and this little gray box down here. We have been up and down, just zigzagging back and forth for actually even a little bit longer than what this chart shows, because that, you could say that this goes all the way back to about February 24th. So we've been in and around this area for a while. I'm going to zoom back in, and a couple things have been going on. The first thing is, in this area, when we first came up to 1883-ish, we started back down in something of a fairly well, what's the word I'm looking at? I don't want to say followable, but a fairly well-defined channel, a little misshapen because it got a little bit broader at the bottom than it was at the top. But we saw that. We saw this little triple dip down here at the bottom when we got into this area where we needed to reverse. And I'll remind you that the time before that we came into this area, we made a little inverted head and shoulders pattern. So here's our little very small, it lasted one day, but it is there, and it clued us in that this was a reversal point. Then we came down, we made this little triple bottom. Not an inverted head and shoulders pattern. Had this last dip been not quite as deep, then it would have been an inverted head and shoulders pattern. Then we started up. We got up over this trend line here. We back tested it. Then we came up, met another line of resistance, and that lasted, we stayed in this little kind of a channel here. Not, I even hesitate to call that a channel, but whatever. We rallied for about a week. Now we've sold off for 2 days. We rallied for a couple days, and now we've sold off for a couple days. Interesting thing is, where we started to juke and jive again is right in this 1840 to 1850 gray area, right at the spot to where we need, if you're a bull, we need a bounce here. Now, I also mentioned over the weekend and also in, I think I've first put this line up over the weekend, but I know we talked about it yesterday and probably one time before that. This line is purely speculative. It is on this chart for one reason and one reason only, and that is that it is parallel to the lines that we've seen up here, to this line we've seen up here at the top. That's the only reason this is on the chart. Okay? Let me show you what I did. I look at the chart, and I'm saying we've got this resistance line right here, and then I say, let's make a parallel copy of that, and let's slide it in. Well, that actually, hold on a second here. Let me make sure I did that right, because that one did not look like the one that I had done before. Let me back out on a 1 hour chart and make sure this line is exactly. Tell you what, we're going to start all over again. We line these tops up right here. You know, when you move back and forth from time frames at freestockcharts.com, sadly, sometimes you things shift around a bit. So let me see if that's what happened. We lined those tops up all right here, create a parallel line. There we go. That's more like it. So that's why this is here. It is really very, very speculative, but it's based upon the fact that there is a strong tendency for the S&P and other markets to follow parallel inside of parallel channels, and we've seen that for years. If you've been following these videos, we've seen it a whole bunch. So, are we going to firm up here and bounce? And if we do, could we potentially end up bouncing all the way up to our target of 1958? Well, you know, we still got our resistance at 1884, and we still have our important support at right around this 1840 to 1850 area. And this is all I'm going to say about that. Nothing has really changed technically today in the intermediate picture. We still need to take out 1884, and if we do, then we have an intermediate target of about 1927 or 28, something like that. And then that would also likely take us on up to that 1958 target as well. But now let's zoom in and take a much closer look at what was going on today. Tell you what, we could even go in on a 5-minute chart. And here we go. We were in something of a descending channel yesterday. I'm going to get rid of that line. It is no longer relevant. We were in kind of this descending channel. You can see 1, 2, 3, 4. Sideways, touch here, come down 1, 2 touches, come up here, start back down. If you'll notice, what happened early today was the bottom falling out, and we started that process. Look at that line, that candle right there is right on the line. I think we opened here, we rallied back, and then we fell back down underneath this line of support. Now, guys, I've seen this happen lots of times in individual stocks and also in indexes and ETFs, and that is often a sign of some short-term capitulation, and it would be. The degree of capitulation would be, I'm going to use a fancy word, commensurate. In other words, it would be relative to the scale that you're looking at. So we were coming down inside this little channel and then broke down through it this morning early, meaning that was a short-term capitulation. People just said, pardon my French, people said, screw it. You know, I'm taking my profits, I'm going elsewhere. Well, we came down to about 1843, 1842-ish, then rallied back into the channel, came back, tested that line again, broke out over this line, stayed over it on a series of little tiny back tests, and then for the rest of the day, kind of went sideways. Now, here's the question. If we draw a couple little short-term lines here to define what took place during today's session, I'm going to make that a light blue. And I'm sorry, this chart is starting to get kind of cluttered again, but so be it. Each one of these lines, I think, means something. So we come down in this channel, short-term capitulation as the bottom falls out for no good reason, rally back, get back into the channel, then break out of it, and all of this taking place in a pretty well-defined little triangle that broke out over the top, albeit by a non-significant amount, and we closed right around the top of our support range of 1840 to 1850. So this sort of, to me, looks like we may be setting up a rally tomorrow. Again, we're somewhat beholden to the news cycle, and because we're dealing with such small trend lines, it's pretty easy for a significant piece of news to completely obliterate a lot of the lines on this chart. But I'll remind you that some of these lines that are right down and around here in particular have a little bit more history behind them than just these little dinky things I've been pointing out today. So let's see if this turns into yet another reversal like we had here, here, and here. If it doesn't, and if we instead fall through 1840, then I think we are very easily going to be coming down to test something right around 1800 as a minimum target from what would be a head and shoulders top. But I'm not giving up on the idea right yet, quite yet, that we're just kind of going sideways for a bit, needing a little bit more of a base, potentially, to get up over 1884 and to head up to this target at 1958. In other words, until this area breaks down and we head down, I'm still not, I cannot ignore the very distinct possibility that we end up in the 1900s sometime probably in the middle of May. So guys, that's it. We're still in between 1884 and 1840, so whichever way we go, either breaking this out, heading up to the 1900s, or breaking this down and heading down to at least 1800, until one of those things happens, we are where we are. And the next move will be triggered by either taking out this line to the upside or taking out these lines right in here to the downside. So guys, thanks for watching the video. Thanks for your support. Take care.